Welcome to Cost Saver Conversations. I'm Angela, and I ask the practical questions so you can quickly understand what matters. Today, I'm joined by Hassad.
Hi, Angela. We are unpacking UK Tax Optimiser versus traditional tax calculators, which saves you more in 2024 today, and tying it back to the wider cost saver ecosystem, including tools like UK Tax Optimiser so you can turn insights into action quickly.
Just a heads up before we dive in, we are your synthetic hosts. We are great with numbers, but as AI, we can sometimes be confidently wrong. Think of us as the digital versions of your most knowledgeable, slightly caffeinated friends.
Exactly. Treat this chat as a smart estimate only, not as professional financial guidance. Always check important details with official sources or a qualified expert before making any big decisions.
So, Assad, we're diving into something that, honestly, for most people, just sounds a bit dry, doesn't it? Tax. But you're telling me we can actually make this interesting today?
Well, look, Angela, it can be dry, right? But what we're talking about today could genuinely save people, a fair bit of cash. So hopefully not too boring.
Right. Cash savings. That's what gets my attention. So, what exactly is the big difference between these tax optimizers and like the regular calculators?
Okay, so traditional tax calculator, right? The kind you'd find on HMRC's website or which money-saving expert, they're great for a quick sanity check, basically.
Oh, yeah, I've used those.
Right? Just to get a rough idea of your take-home after a pay rise or whatever. You pop in your gross income, tick a few boxes, and boom, you get your income tax and national insurance. Free, fast, easy.
And loads of people use them, don't they? I remember reading somewhere that,
Massively popular, yeah. HMRC's data shows over 2.5 million people used their calculator just in the 2022-23 tax year. So for a quick estimate, they're perfectly fine, honestly.
wow, 2.5 million. That's okay. So if they're that useful, what's the catch? Why do we need something different?
The catch is, it's baked right into how they work. They're what we call rules-based and static. They just apply the current tax bands to whatever numbers you give them. That's it.
Static, meaning,
Meaning they don't think beyond what you type in. They don't ask if you've got unused pension allowances from previous years. They don't flag that, I don't know, salary sacrifice might help you. They definitely don't consider whether transferring assets to your spouse could reduce your household tax bill. They just calculate what you owe. End of story.
so they tell you the bill, but don't help you shrink it.
Exactly. They're a measurement tool. They tell you the size of the problem, not how to make it smaller. And this matters more than ever in 2024, honestly.
Because of all this fiscal drag stuff, right? The frozen thresholds?
Spot on. So the personal allowance has been frozen at 12,570 pounds since 2021, staying that way until at least 2028. Higher rate threshold, same deal, frozen at 50,270. Meanwhile, wages are rising with inflation, so
So more of us are getting dragged into higher tax bands.
yeah, hundreds of thousands more. The Office for Budget Responsibility reckons by 2027-28, around 3.2 million more people will be paying income tax than in 2021, and 2.1 million more in the higher rate band,
Oh, that's actually quite sobering.
right? So just knowing your tax bill isn't enough anymore. You need to know how to reduce it, which is where a UK tax optimizer comes in.
Okay, so what does it actually do differently?
It's fundamentally different. Instead of just applying a formula, it takes this broader view of your whole financial picture. It actively looks for legally available ways to reduce what you owe.
Like what? Give me an example.
So, scenario modeling for one. What happens if you increase your pension contributions by £200 a month? What if you use your full ISA allowance? What if you split income with your partner? It runs all these scenarios side by side.
Oh, so it actually suggests things, not just.
Exactly, it's proactive. And it does this thing called allowance tracking. The UK tax system has loads of allowances that people just don't use because they don't know about them.
Such as?
Personal savings allowance, dividend allowance, capital gains annual exempt amount, marriage allowance. Oh, and you can carry forward unused pension allowances from the previous 3 years.
Wait, really? You can carry forward pension allowances? I had no idea.
See, that's exactly my point. Most people don't. An optimizer surfaces these opportunities without you having to know the right questions. It's particularly brilliant for pension stuff, like if you're earning between $100,000 and $125,140,
Mm-hmm.
your marginal tax rate is effectively 60%, 60, because of the personal allowance taper. An optimizer spots that cliff edge and calculates the exact pension contribution to bring you below it.
60%. Wow.
I know, right? And it helps with family planning too. Not that kind. Tax planning. Like if one partner's basic rate and the other's higher rate, shifting assets can save hundreds.
So if your income's near those thresholds, 50,270 or 100,000, it's particularly valuable?
Absolutely. Those are where the system creates these sharp spikes in effective tax rates. Even small adjustments can mean big savings. Have I explained that clearly?
Yeah, no, that makes sense. Can you give me a real example, though?
Sure. So, Sarah, senior manager in Leeds, earning $105,000. Traditional calculator just tells her she owes a big tax bill. End of. But an optimizer immediately flags that if she puts an extra $4,730 into her pension,
Yeah?
she brings her adjusted net income below $100,000, gets her full personal allowance back, and her marginal rate drops from 60% to 40%. That's over $2,800 saved just from that one move.
Over $2,800? That's real money.
It is. Or take James and Priya. He earns $55,000. She earns $18,000. They've got joint savings. Optimizer says, put the savings in Priya's name alone, the interest gets taxed at 20% instead of his 40%. For $30,000 in savings at 4% interest, that's $240 a year saved.
I hadn't thought about it like that. What about freelancers?
Oh, even better sometimes. Marcus, self-employed, good year, $80,000 income. Traditional calculator, here's your bill, mate. Optimizer says, hang on, you can carry forward 3 years of unused pension allowances, contribute up to $60,000 this year, get tax relief on all of it.
Up to 60,000 pounds?
In one go, yeah. These aren't edge cases, Angela. This stuff affects millions of people. They just don't know it.
That's quite eye-opening, actually. But okay, devil's advocate, won't this get me in trouble with HMRC?
No, no, absolutely not. This is using legitimate allowances that Parliament specifically created for people to use. It's tax planning, not tax evasion. Completely legal, completely above board.
Oh, that's actually reassuring. And is it just for wealthy people, or?
Not at all. I mean, higher earners have more opportunities, sure. But basic rate taxpayers can benefit loads from marriage allowance transfers, ISA planning, pension contributions. The tools work for anyone with taxable income, basically.
How long does it take to use one?
About 10 minutes if you've got your income details handy. That's nothing compared to what you could save.
10 minutes. Right.
The key thing is, well, the key is doing it before the tax year ends, April 5th. Once that deadline passes, unused allowances are gone forever.
Like the ISA allowance?
Exactly. 20,000 ISA allowance, use it or lose it. Capital gains annual exempt amount, same deal. It's $6,000 for this tax year, but drops to $3,000 from April. So there's genuine urgency here.
So don't leave it till March.
God, no. Set a reminder for January, honestly. Gives you 3 months to act without panicking. Does that make sense?
Yeah, that's smart. So, bottom line, which tool should people use?
They're not really competing, you know? Use a traditional calculator for a quick estimate, checking a payslip, comparing job offers, whatever. But use an optimizer when you want to actually reduce your bill.
One for information, one for action.
Exactly. And look, in 2024, with these frozen thresholds and wages rising, the difference isn't academic. It's money, real money. Hundreds, maybe thousands of pounds a year for some people.
Thousands?
For higher earners near those cliff edges, absolutely. It's a practical starting point for anyone who wants to take tax planning seriously. Though I should say, it doesn't replace proper advice for complex situations.
Fair enough.
But honestly, tax is one of the biggest costs in most household budgets. It deserves at least as much attention as your energy bills or mortgage rate, and the tools are there, often free, to help you manage it better.
So what's the first step then?
Just go to one of these optimizers, put in your income details, see what it finds. 10 minutes, costs nothing, could save you hundreds before April. Why wouldn't you?
When you put it like that, yeah, why wouldn't you? Assad, this has been really eye-opening. I think a lot of people genuinely don't realize how much they're potentially leaving on the table.
Most people don't, and it's not their fault. The system's complex, but that's exactly why these tools exist, to make it accessible.
Well, you've definitely convinced me to take a look. Thanks for breaking it all down so clearly.
My pleasure, Angela. Honestly, if even a few people listening save some money this tax year, that's worth it, isn't it?
Quick side note, this guide connects with other cost-saver blogs, especially Free Ways to Slash Your Energy Bills This Winter, Home Insulation ROI Guide, and How Weather Predictions Can Reduce Your Energy Bills.
Exactly. And reading those together gives you a fuller picture of safety, energy costs, and long-term affordability before you choose a postcode.
And if you want to apply this immediately, jump into tools like UK Tax Optimiser right after this episode.
Primary sources used here include HMRC Annual Report and Accounts 2022 to 2023, gov.uk, and Office for Budget Responsibility, Economic and Fiscal Outlook, March 2023, so you can verify the data yourself and stay evidence-led.
That wraps this cost-saver conversation with Angela and Assad. If this helped, share it with someone house hunting so they make safer and smarter money decisions.
Your next step is simple. Try UK Tax Optimizer, then read Free Ways to Slash Your Energy Bills This Winter and use both together before committing to a move.